This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on October 14th, 2011. Our time is 8:36 in the morning Mountain, 10:36 Eastern. Radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, go to Harold's website. You can listen to them anytime. They're archived there. HESradio.com, HESradio.com. And joining us from Disney World, where he went to a Halloween party last night and will be taking in more festivities today, he's there with his grandkids. The truth of the matter is, Harold, you enjoy it more than the grandkids. Let's be honest.
Well, if I have to be honest, Randy, let's be honest. I love it here. I got to tell you. You know, living in Florida, Disney World's only 3 hours away, drive. So, you know, it obviously took my kids when they were growing up, and now that we have grandchildren, you know, to see the looks on their face and to relive that is just such a special thing. And for all those that have never been to Disney World, the only time that you really want to go is when they have these special events. They open up the park at 7 o'clock at night, the Magic Kingdom, and this was Mickey's Not-So-Scary Halloween party. And my whole family was dressed as vampires, and we just had an amazing time. The kids were actually trick-or-treating in Disney World. It was really a special event. And the beautiful thing is that those that have been to Disney know that during normal times, you'll line up for an hour to 2 hours to get on a ride. There is no waiting. They only allow a few thousand people in at night, and it's a very special event. They do it for Halloween, and they do it for Christmas. So if you ever get a chance to go to Disney World in Orlando, you definitely want to take on one of those themes. But all in all, Randy, you're right. I'm still a kid at heart, and when you walk on Main Street, USA, all your stress is gone, and you feel like a kid again.
You know, it's one of those things where I was telling my mother about you going with your grandkids and your wife, and she said it sounded like a lot of fun. I know a lot of Canadians have been down to Disney World. What's happening?
You better believe it. And, you know, the thing is that it's a fairly expensive place, especially when you're staying within the park. So because of the weakness of the U.S. dollar, you know, you get a lot of people from Europe and from Canada, obviously, coming because the dollar is stronger than the U.S. dollar, so that certainly helps. But all in all, just having a wonderful time, and we had a good week in the markets this week. A little choppy, but gold's trading up $12 today as we're taping the show. We're trading as high as $1,680. Silver's trading up 70 cents at $32.40. So the market's holding in. It's building a base right now. Again, it got hurt a little bit when the market fell substantially over a few weeks ago, but the market's come back from $26. It's actually sitting at about 32 and change, and it's looking like it's building a base. The oil market's up strong. Actually, the oil market had a very big week this week. It's back up to $86.50. It's up another $2 today. The euro is the major reason why the stock market rallied and why the U.S. dollar fell, and another reason why gold and silver did well this week. They're actually trying to work out a package for Greece in Europe, and you saw the euro rally very, very strong, and actually the euro is back up to 139. So it's up 144 points today, over a penny, and that's a major thing. So what we saw this week, which was very encouraging, was the euro rallying and the U.S. dollar falling, and the Canadian dollar getting stronger also. The Canadian dollar is at 98.64 as we're taping the show right now. But the big news was really the euro gaining strength on the news that they may have a bailout for Greece, and that pushed the U.S. dollar down. It was almost at 80 cents, and that was another reason why we saw a back off in the metals over the last few weeks, is that the dollar got very strong and got very close to that dangerous 80-cent level. If it had broke 80 cents, it could have literally rallied to 83, 84 cents, and again, it's a short-term situation. However, the trend for the U.S. dollar is still extremely down, and we do anticipate that the U.S. dollar will continue to fall substantially, which is another reason why we're recommending gold and silver so substantially, because there's no doubt that the gold and silver market will continue to rally, number one, as the dollar falls, and number two, as inflation continues to get strong. Also, what we did see was a massive amount of short positions coming out of the market, which is a very good sign. It means that when the market fell initially from 50 in April down to 34, then went back up to 44 and then fell back down to 26, that eliminated a lot of the shorts that were in the market, the people that were pushing the market down. Now, these are not your day-to-day speculators in the market. These are massive banks and hedge funds that were speculating in the market and pushing the markets lower. So again, when we talk about owning the physical metal as opposed to paper metals like buying futures contracts or ETFs or options on futures type of things, those type of things you're going to get hurt on badly. Those you're just trading. If you want to continue to be in the metals market and catch the whole trend that this market is going to make over the next 5 years, my suggestion is owning the physical metal, owning it outright, because basically you have no margin calls, and even if the market does pull down, you're never forced out of the market. But let's face it, silver's gone from $4 to $50, back down to 26, and now is back up on the rise. If you're heavily leveraged, those type of situations obviously can hurt you. If you own the outright metal, which is what I recommend, you never have those type of situations. And all we want to do is catch the extreme moves that are coming. The other thing is that these markets will remain extremely volatile, as you can see. It's not unusual to see silver move up or down $1, $1.50, $2 in a day now. When we first recommended silver back 10 years ago, when silver was basically at $4, to get a 10-cent move in the market was extreme. Now to get $1, $1.50 in a day is almost like a normal occurrence. There are going to be days coming up in the foreseeable near future that we're going to see $2 and $3 increases in the price of silver in a day, and we'll see gold go up 100 to 150 in a day. So we're still extremely bullish. Obviously, nothing changes. We've been doing the show for 10 years, and basically the major reason for recommending the hard asset market, gold, silver, diamonds, those type of investments, was because I was convinced, and is Randy, that we are going to see extreme inflation. And as the U.S. dollar continues to fall, and they continue to print and print more money, which we now know that it looks like they're going to come out with QE3 in some form, quantitative easing 3, where they're going to have to put a fortune back into the marketplace. The thing is that the frightening thing is that the U.S. government has put trillions and trillions of dollars back into the economy. The economy has not gotten better in any way, shape, or form. It's just not growing. And it's obvious why that's happening. The fact is that these are the guys that got us into trouble in the first place. These are the guys that are going to try to get us out of trouble, but they don't have a clue what they're doing. Because the bottom line is that unless the consumer is spending money and the consumer is comfortable, the economy cannot grow. Unless the everyday hard-working man and woman is out there buying cars and TVs and furniture and those type of things and taking out loans, there's no way that the U.S. economy is going to grow. And that just is not happening at this time. And the reason it's not happening is because the value of their real estate has plummeted. And the fact is that nobody feels rich when the value of your home has dropped. We all know how severe the situation is in the United States. There's certain areas that are much worse than others, but the fact is that this is not a short-term situation. We've been doing this for 10 years now, and we take this very, very seriously. The fact is that we are going to see over the next 5 years either that we're going to sustain our money and grow our money to deal with inflation, or if you choose not to go into the hard asset market and stay in mutual funds and stocks, I believe you're going to find the opposite. I think you're going to find that your assets are going to dwindle substantially. I'm not a Rhodes Scholar, but I do realize that the United States owes $15 trillion. A lot of it's to communist China and to Russia and to India. The fact is they can't pay back this money. So if they owe all this money, and the economy is not growing, and the job situation is dismal, why in the world would we want to invest in U.S. stocks if the U.S. is going under? I mean, this is the most unbelievable financial time that most of us have ever experienced, and we haven't seen in any way, shape, or form the brunt of what's really going to be coming. I think that 2012, unfortunately, is going to be a concerning year. The fact is that going into the first quarter of next year with no growth and all these problems, we're going to see severe downturns in markets. October, as an example, is one of the heaviest downtimes for stocks. However, the Dow was down 5 months in a row. It looks like this month it is going to rally, and the Dow is sitting back up at 11,500. One major reason why the Dow did rally this week was because the euro rallied and the U.S. dollar fell, and when the U.S. dollar is weak, it prompts money coming in from Europe and other parts of the world where their dollar is stronger. So nothing is really changing in that area. Nothing has changed as far as inflation. We're still very, very bullish on the inflationary markets, and we do believe that gold and silver are nowhere near their highs. So my strongest recommendations at this point, especially going into next year, and it's going to be a very frightening year, it's all about capital preservation. It's all about getting yourself set up to deal with inflation, because there is no doubt with $86 to $90 oil, with food prices still high, and with a very weak American dollar and printing more and more every day, that we're going to have substantial inflation. And the markets that do well during times of high inflation are gold, silver, and diamonds. That's the area that you want to concentrate on. You also want to keep some cash on hand. There will be opportunities for those that have cash. The fact is that if you're speculating, if you're leveraging your positions heavily, if you're in the futures markets, if you're doing things like that, the chances of success in these markets are slim to next to none. The fact is that you want to be in the market for, especially gold and silver, for this whole run. And we've been in it for the whole run. We bought silver at the exact bottom, $3.80, and we bought gold at $255. That was our initial buy-in into the market. So we've been dedicated to this market for 10 years now. And again, I've traded this market back in the 70s. I knew about gold and silver when gold was at $35 in 1972. At that particular point, gold went from $35 all the way up to $850. Silver went from $1.50 in 1972 all the way up to $52. And the reason for that was because of similar situations to what we have right now. So if you don't learn from history, history tends to repeat itself. And the fact is that you've got to go back to the high inflationary times of the late 70s, early 80s in order to understand what's going to happen over the next 4 to 5 years. And my goal is for my Canadian clients and listeners to be in a position to deal with inflation and to profit by it. There's no reason in the world why we have to sit back and lose our money like 90% of the people out there when we're in the right market situation. We've been in it for 10 years. We're going to be in it for as long as we need to be, and I see smooth sailing for the next 5 years. Sure, the markets are going to be choppy because you have buyers and sellers that are short-term in the futures market, but if you're a holder of gold and silver for the long term and you're not heavily leveraged, you're going to get through these difficult times and I believe make a tremendous amount of money before this whole thing is over. We could see gold in excess of $4,000 to $5,000, and right now it's trading at about $1,600. That's still about another 300-400% return on your invested dollar in gold, and I think that we could see silver basically trading at $150 to $200 before this whole thing is over. So in no way, shape, or form get discouraged when you see these pullbacks in the market, because they're normal. They happen all the time in every bull market, and we're in a massive bull market. So let's continue with what we're doing. Gold, silver, diamonds. No speculation. Keep cash on hand. Pay your debts down. And not only are we going to get through these difficult times, but we're going to be in that 10% that I always talk about. 90% of the money is made by 10% of the people, and that's exactly the situation that we're sitting in right now.
In our newsletter last week, we had the quote, and did mention it on our show, from Kyle Bass, who's a money manager and a strong advocate of having precious metals in your portfolio. He says it may not be the end of the world, but a lot of people are going to lose a lot of money. Our goal is to not be one of them. And we agree with that 100%. That's our goal, too, is to not lose money and obviously protect the money that you have through investing in precious metals. The telephone number to invest in precious metals, there's only one company that Harold recommends, and that is Worldwide Precious Metals. Their website, wwpmc.com, wwpmc.com. The telephone number, 1-866-623-2002, 1-866-623-2002. The website, wwpmc.com. If you'd like to receive our free weekly newsletter, they'll be happy to send it out to you via email free of charge. Some of the top quotes we have this week in our newsletter, and there was a great quote from Howard Ruff, and it's in the silver section of our newsletter. It's another must-read newsletter, and I encourage you to speak with Worldwide and get on the list. It's the companion to our radio show. It's a must-read every week. Howard Ruff said, "You wouldn't cancel your insurance policy in the middle of a hurricane. And you shouldn't sell silver when it takes a tumble. Like any insurance, silver's value will pay out over time, not day by day." Some of the other great quotes we have this week in relation to gold. This is from Paul Brodsky, who's a financial analyst, money manager. He says gold is not a financial asset to be compared with .com stocks or Miami condos, and it's not a commodity like pork bellies or crude oil. It is the ultimate currency for the truly sophisticated wealth holder in a time of substantial unreserved credit promotion, meaning money printing. Also, Richard Russell came out this week and said gold is undergoing its fifth correction since 2006. Currently, the 200-day moving average comes in at 1531. December gold is trading around 1626. That was a few days back. The longer gold holds above the 200-day moving average without breaking, the more solid and bullish the position for gold. The rising stock market means less pressure to sell gold to cover margin calls and losses in stocks. Richard Russell, very, very bullish on precious metals. Some of the other quotes that we had this week in relation to what's happening in the world financially, quite shocking, really. We had Mervyn King, the head of the Bank of England, the chief, saying, "This is the most serious financial crisis, at least since the 1930s, if not ever," as they continue to grapple with the sovereign debt crisis over in not only the UK, but the Eurozone as well. In fact, I was reading an article this week that potentially the UK could face a downgrade the way the United States did. John Thain, CEO of Citigroup, said, "The future is not going to be like the past we knew. There is no exit from this morass." Also, Charles Stevenson, president of the hedge fund Navigator Group, says, "I don't think it's a time to make money. This is a time to rig for survival." And Peter Schiff said, "We have been in a bear market in stocks since 2000 in real terms. Look at the Dow in terms of gold. I don't think the bear market is ending. It's not going to end anytime soon. It will continue for a long time. In fact, our chart of the week in our newsletter, the S&P 500 has declined 30% in real value since 2000. You can see it in the newsletter, and I really encourage you to get the newsletter from Worldwide by calling 1-866-623-2002, the website wwpmc.com. One of the key components to any bull market is obviously people having strong faith and buying on the dips, and that is what we are seeing. This is from King World News. Global demand for gold and silver is at unprecedented levels. Now, obviously, Harold recommends that you deal with worldwide precious metals to invest in precious metals here in Canada. They've been in business the entire time of the bull market, the full 10 years of the bull market in precious metals. Their telephone number, 1-866-623-2002. The Perth Mint, one of the largest mints in the world, communicated to its customers last Friday. Demand for our coins is currently running at unprecedented levels, and we have been inundated by high levels of web and telephone traffic from clients all around the world. This has put tremendous pressure on our business systems and customer service department, which have struggled to cope with the number of inquiries and orders. Peter August, CEO of Australian Bullion Company, a Melbourne company out of Australia, which is one of the largest and most respected bullion dealers in the country, told King World News, "We have never, ever seen the levels of demand of physical gold and silver that we're seeing. One of the biggest challenges we have found in recent times is that our client base has become much, much more savvy." And changes instead of challenges, changes have become much more savvy, and they are aggressively buying on the dips. As an example, with the recent plunge in the price of silver, we have noticed that the demand for physical silver has exploded. Another complicating factor is the fact that there are virtually no sellers in the silver market. We have found the exact same buying pattern occurring in the gold market. As the price declines, we have been experiencing an unprecedented amount of new orders for physical gold. Demand has also been extraordinary for both gold and silver. Our two main suppliers are in the process of ramping up capacity because they simply can't handle the current levels of demand. Harold, that is a huge positive for this bull market. I know I've spoken to different people who looked at the pullback in gold and silver as a buying opportunity. That says to me that people realize the debasement of money that's happening around the world. They see it. They know what's going on, and they're taking advantage of buying precious metals when they've come down because they know going out. The only way out of this for a lot of the central banks around the world is to debase their currency, print money, quantitative easing 3 for the United States, and that is going to be very bullish for precious metals, but very detrimental for those that are holding paper assets.
You're right, because again, by bringing in QE3, what you have to do is put, I don't know what the exact figure is, but probably close to $1 trillion back into the market. They don't have that money. They borrowed $15 trillion the U.S. So I think that, again, that's 100% correct. We are going to continue to see a tremendous amount of printing. It's the only way that the U.S. can gain any money whatsoever, and that's going to continue to weaken the dollar, and that should push gold and silver prices substantially higher. So I agree with everything that you just said. The fact is that you just want to be in the physical metal and sit back and let the market do its thing. Don't be worried about the pullbacks, because we've seen 10 of them in the 10 years that we've been in this market. And the fact is that every time that has happened, the market has come back and made new highs. Now, also understand that if this move was over, we would have seen a similar move to what we saw in 1980, when silver went from $52 to $26 in about 4 or 5 days. And then it was over at that point. The fact is that we're nowhere close to that. These pullbacks that we've seen in these markets, have been because of tremendous moves on the upside. Don't forget, we saw silver go literally from $17 to $50 in a very short period of time. So again, the market was substantially overbought on the short term, and that's why you saw these markets come down. But if you own the actual physical metal, those pullbacks don't hurt you at all.
It was interesting this week. The Fed minutes from their last meeting came out. Some Fed officials sought to retain the QE3 option. Supposedly, there were 2 of them. That, according to the minutes, the Fed Reserve said some officials last month wanted to keep further asset purchases as an option to boost the economy, as policymakers saw considerable uncertainty that U.S. growth will pick up. I know that some people believe that maybe QE3 won't happen this year, but it definitely will happen next year in 2012. It's one of those things that we should be looking out for, as we did with QE1 and 2, which gave precious metals a huge boost. The telephone number to invest in precious metals. As we always say, there's only one company that Harold recommends you deal with when it comes to investing in precious metals: gold, silver, platinum, palladium, Worldwide Precious Metals, a great Canadian company in business for 10 years, the entire bull market run. They've been through all the ups and downs. There's the experts in this very specialized field and market. They're the only ones to deal with, according to Harold. The website, wwpmc.com, wwpmc.com. The telephone number, 1-866-623-2002. What I would say to you, if you're hearing other people say that they can help you as well, call Worldwide first. Give Worldwide a call first. Let them obviously tell you what they can do for you, and that is help you set up your own precious metals investment account and maximize the profit, minimize the risk. The telephone number, 1-866-623-2002. The website, wwpmc.com. Going to come back and talk about yellow fancy diamonds. It was amazing this week, some of the news that came out about yellow diamonds. And we will talk about it as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on October 14th, 2011. Our time is 9:02. That is Mountain Time, 11:02 Eastern Time. Our radio show runs on 630 CHED in Edmonton, AM 640 in Toronto. We should mention that all the shows are archived on Harold's website, HESradio.com. If you ever miss a show, catch us on HESradio.com. Harold is broadcasting from Disney World. He was there with his grandchildren and his wife for a Halloween party that they had last night and some festivities this weekend, so we wish them well. To invest in precious metals, the telephone number, 1-866-623-2002. and the website www.pmc.com. Worldwide, the only company that Harold recommends you deal with when it comes to investing in precious metals. www.pmc.com, 1-866-623-2002. On the diamond side of things, Harold's website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. And it was exciting this week because on Harold's website, if you go to the featured diamond, go to rarecoloreddiamonds.com, at the top of the page there's the featured diamond. We have it in our newsletter as well. We actually have now, for the first time, the video on there. And it gives you a totally different view of the diamond. The pictures are great. Don't get me wrong. The pictures are outstanding. But when you take a look at the video really shows you the entire scope of the diamond all the way around. It does a 360. It is spectacular. And you can see it on the website, rarecoloreddiamonds.com, featured diamond of the week. And I'll tell you what it is. This week's diamond is a 0.77 carat emerald cut, fancy, vivid, yellow, internally flawless. Sotheby's and Christie's, and we have these stories in our newsletter, we will talk about them, are featuring 2 rare yellow diamonds at auction in the next month. Both could go for record prices, as we have recently seen with orange and blues at auction. So get this diamond into your portfolio collection today before yellow flawless values continue to go up. If we get record prices with the yellows, which we're expecting, then obviously the values for yellow diamonds will continue to go up. And see this 0.77 carat emerald cut, fancy, vivid, yellow, internally flawless diamond video. All you need to do is go and click on the featured diamond of the week. And Harold, it looks spectacular, this live video that we have. It's really well done.
Thank you very, very much. It's been a tremendous work in progress, believe me. It's just been very, very difficult to do, but we're making tremendous headway. So you're going to see that when you go on the website, you can see, and they're all marked with video. So the diamonds that have been videoed, you can actually look at the videos, and within the next 2 weeks, the entire site will be converted to video, and then you're going to get to see every aspect of the diamond. This is something we've been working on for over a year now, and it's working out beautifully, but a very, very difficult process, because to actually film colored diamonds is not as easy as it seems, because a lot of it is light reflection. So, again, what's happening in the diamond market is just one word: unbelievable. You know, the fact is, 6 years ago, I brought this market to you on the radio when nobody else even mentioned the word investment diamonds, and really very few people knew anything about the colored diamond market. But the colored diamond market is an amazing market. When you really think about diamonds in general, first of all, when you're wearing a diamond ring, first of all, you're wearing something that's prehistoric. You're wearing something that's billions of years old, because diamonds are billions of years old. They're miles below the Earth's surface. They come to the Earth's surface because of volcanic eruption, and they come to the surface in that way. And then they're mined, and then they're cut and polished. Now, most diamonds that come out of the ground are white diamonds or clear diamonds. However, if there's certain minerals in the ground, it can change the color of a diamond from white to yellow to green to blue to red to pink. But again, they're all made of exactly the same thing. They're compressed carbon. So basically, if you take a 1-carat white diamond and put it beside a 1-carat vivid blue diamond, for example, a 1-carat white diamond can sell for about $2,500 a carat. Put it beside that vivid blue that just sold for $1.6 million a carat. They're the same product. They're the same carbon. However, because there was minerals present in the ground, in this case boron, to turn a diamond blue, the value of that diamond went from $2,500 to $1.6 million. That's the beauty of owning a colored diamond. Now, the fact is that over the last 6 years, I've recommended to you 2 distinct type of diamonds that do extremely well during times of high inflation. One of them is yellow flawless diamonds, which Randy talked about today and we're going to talk about soon, and the other are argyle pink diamonds. Those 2 diamonds, those 2 colors of diamonds, I believe are where most of the money is going to be made over the next 5 to 10 years. And here's why I think that. First of all, yellow flawless diamonds, there's all different colors of yellow. There's faint yellow, which we don't deal in. There's very light, which we don't deal in. There's light, which we don't touch. Very seldom will buy a fancy light yellow, a canary type diamond, if it's flawless, and it's really beautiful. But the colors that we carry are the fancy yellow, the fancy intense yellow, and the fancy vivid yellow. And the featured diamond this week is a fancy vivid yellow flawless diamond. So the color of that diamond is the strongest that you can get. And consequently, these diamonds are just skyrocketing in price. You know, back in 1980, you could have bought a 1-carat yellow flawless diamond for about $500. Now they're close to $20,000, and you can barely get them. The fact is that these diamonds go up by about 25% a year every year. They just continue to go up and up and up. There are no new mines that have come online within the last 15 years that produce any color diamonds hardly at all. In fact, even if a new mine was discovered, it doesn't mean that it's going to change the colored diamond market in any way, shape, or form. What really changes that market is when these mines close down. But anyways, there's all different clarities of yellow diamonds. We only deal in the internally flawless. There's VVS1s, which has a flaw. There's a VVS2, which has 2 flaws. There's a VS1, a VS2, an SI1, 2, and 3, and an I1, 2, and 3. And the I clarity diamonds, you can see the visible flaws with your eyes. When it comes to yellow diamonds, you want to own the flawless diamonds. They're the very, very best. They've got a track record. You could see them on our website when you look at the historical price tracking system. They go up by 25% every year, except for this year. In September, they went up by 45%, and that was because the miners that produce these diamonds, that mine them, were pulling so few diamonds out of the mine that they had to raise their prices to the cutters who they sell these diamonds to. So the fact is that these diamonds go up by 25 to 45% a year, which is a phenomenal return, because the other part of it is that they never decline in value. In all of the years that I've been in the investment business, there's never been a decline in the price of rare colored diamonds. White diamonds have fallen, but colored diamonds never have, and the reason for that is there's very, very few of them. It takes 1 million carats of white diamonds to find one pink diamond. 1 million carats of white diamonds just to find one pink diamond. That's how rare they are. The other thing about these yellow flawless diamonds is that during times of high inflation, back in the late 70s, early 80s, these are the diamonds that went up 500% those 2 years. So we believe we're going to see a very similar market situation that we saw in 79 and 80, except this time there's very few of these diamonds available for purchase. So we feel that these diamonds over the next 5 years will increase by 500%, just like they did in 1979 and 80. The reason that they're not going to happen over the next 2 years is because the U.S. is going to keep interest rates down at zero, or as close to zero as possible, and basically they'll start to raise interest rates in about 3 years from now. As they start to raise interest rates to fight off inflation, they're going to have to raise interest rates substantially. In 1980, they raised interest rates all the way up to 20%. I believe the same thing is going to happen. You want to own these diamonds because a fancy yellow flawless diamond you can buy today for $20,000 could be a $100,000 diamond in 5 years from now. And you tell me any other investment that can give you that type of return with no risk in the market, because again, these diamonds have never ever dropped in price, and now there's so few of them available that the prices are just continuing to go up and up and up. And now that they're setting records at auctions, again, I couldn't be more pleased. You know, Randy, now that you brought that report out, all of my clients and friends in Canada that own yellow flawless diamonds have got to have a huge smile on their face, because again, it's now becoming national news that these yellow flawless diamonds are just skyrocketing in price. Again, to get a vivid flawless diamond, it's the best that money can buy. But they all go up the same percentage. They go up by about 25% a year. The fancy yellow flawlesses, again, you can buy for about $20,000 right now. The fancy intense yellows are up to about $30,000, and the fancy vivids are up to about $50,000 to $60,000 a carat. And these diamonds will continue to climb and climb and climb. Most of my clients that own yellow flawless diamonds have bought them to put away for retirement. The fact is that if you have an RSP out there, you know it's underperforming. You know the fact that if it's in mutual funds, you're not going to make money in your mutual funds. I'd much rather see you sitting in cash in your RSP than sitting in mutual funds. But again, most of my clients that have bought diamonds for retirement have just put them in the safety deposit box and just sit back for the next 10 years, and then we'll sell them for you on our auction website, which is coming up either at the end of October, beginning of November, which we're very, very excited about. It's been a work in progress for 2 years, and it's just being loaded up now, and hopefully within the next 2 to 3 weeks we're going to have our first auction, and we'll announce it for the first time on the radio show, so everybody's going to know about it. Yellow flawless diamonds, while you can still get them, and while they're still at a reasonable price, I recommend them very highly. They're very safe. They never go down in value. And again, we feel that they could go up 500% with the upcoming inflation, just like they did in 1979 and 80. And these are the same diamonds that I've given to my grandchildren, and nothing's more dear to me than my grandchildren. All I want to do is see all my Canadian clients and my families and your families do well. The other situation is Argyle pink diamonds. This is probably one of the most exciting markets you could ever imagine, because the Argyle mine is going to close down. And that's where 95% of the pink diamonds come from, is the Argyle mine. Now, it's been in operation since 1985. It's the largest producing diamond mine in the world. It produced 30 million carats of diamonds a year. Most of those 30 million diamonds are low-grade white diamonds, industrial diamonds. Very few gem-quality whites came out of Australia, but they're famous for their pink diamonds. These are the most beautiful pink diamonds in the world, and they all come from the same mine, the Argyle mine, and it's closing down because they're producing less and less and less diamonds every year. Now, the pink diamonds are a very small part of that mine. It's only about 200 carats a year, enough to fill the palm of your hand, but these diamonds are so valuable and so beautiful, and the colors are so outrageous that in most cases, they're graded on their color only. That's how beautiful these diamonds are. They're also known for being small diamonds. 95% of the Argyle pink diamonds are under a quarter of a carat. And most of us out there would say, well, gee, a quarter of a carat, that's nothing. But when you put them into the right settings and you display them in the right way, they're just so valuable, and they go up so much in value. And the fact is that the largest pink that came out of the mine last year was only 2 carats, and that sold for $3.5 million. So the fact is that the Argyle mine they're trying to keep it open till 2018. I sell most of the Argyle pink diamonds. Over half of them in the world are to my Canadian clients. And the fact is that these diamonds, again, are phenomenal investments, but the mine is not going to stay open, in my opinion, till 2018. I see 2016 maximum, which is only 4 years from now. And the fact is that what tells me that the mine is coming to a close is that, number one, the amount of diamonds coming out of the mine is falling substantially. The amount of high-quality pinks coming out of the mine are falling tremendously, and I know that because I bought the last 2 quarters of production, and the amount of diamonds that I received were far less than what I received at other times. The other thing that's happening is that the colors are starting to change, and they're starting to bring in, the pinks that were so vibrant and beautiful and gorgeous and vivid and intense and all that. You're starting to see brown seep in. And now, and this is a huge tip-off, because if you look at what Argyle is doing, they're starting to promote champagne and brown diamonds. Now, the fact is that when the browns start to come into the pinks, I don't like a brownish pink diamond. I love the beautiful, fancy pinks, the intense pinks, and the vivid pinks, and that's what I have put away for my clients. In fact, I've invested close to 8 figures in buying out as many of the Argyles, because I see the mine coming to a close a lot faster than most people do. And again, I've invested very, very, very heavily in the Argyle pink diamonds because I know what happens when the mine closes. These diamonds can increase by 10 times what you're paying for them now. It means that a diamond you can buy for $50,000 will be a $500,000 diamond in 10 years from now. And again, there's very few investments that can give you that type of return with the safety of that market. And the reason that I say that these diamonds can go up 10 times what they are now is that we just saw the same thing with blue diamonds. The Cullinan mine in South Africa closed. That's where those beautiful blues came from. And a blue diamond sold for double what it was supposed to sell for last week at auction. Blue diamonds went from $200,000 a carat to $1.6 million a carat in last week's auction. That's an 800% return from 2005 to 2011. So I'm very, very excited about what's happening in the diamond market. I put a fortune of my own money into it, which I feel very comfortable with, and my clients that are in the market absolutely love these pink and yellow flawless diamonds. So again, my strongest recommendation to get through these extremely difficult times and to have protection and insurance is to own gold, silver, and some rare colored diamonds. If you're sitting in mutual funds that are in your everyday trading account, liquidate some of those. You're not going to make money in the mutual fund market over the next 5 years. You're not going to make money in the stock market over the next 5 years. So get out of some of those markets, free up some cash, put some of it into a rare colored diamond that can return anywhere from 5 to 10 times your money over the next 5 to 10 years. I'm very bullish on diamonds. I'm seeing a major change in Argyle, very few yellow flawlesses coming online, and again, that's the area that you want to be invested in. The other thing is, if some of these analysts are right about how severe the world economy is, comparing it to 1930, which again, I'm in agreement in many of the cases, a diamond is the only form of portable and private wealth. It's the only asset that you can cross a border with, that you could trade for something, that you could sell in another currency. Again, with everything happening out there, with the sovereign debt problems in Europe, with the United States owing $15 trillion and can't pay that money back, with, again, England and Greece and all these countries on the verge of bankruptcy, to own a rare colored diamond put away for safety is probably one of the smartest moves you'll make. And again, you deal directly with me. I deal with every single client and have a personal relationship with all of my clients to call. So please, if you've got any concerns about the world markets and you have questions, if you want to see how diamonds will fit into your portfolio, you can get to speak to me directly. And again, it's my pleasure to work with you on a one-on-one basis, because nothing is more important to Randy and I than our Canadian clients being set up for the next 5 years, because the markets are going to be extreme, and we want to make certain that we come out of this doing extremely well.
The telephone number to speak with Harold, 1-800-432-1022. 1-800-432-1022. The website, rarecoloreddiamonds.com. And I should remind you, our featured diamond this week, you can go to the website and see the featured diamond, see the video. You can see a picture of the diamond in the newsletter. 0.77 carat emerald cut, fancy vivid yellow, internally flawless. As I mentioned earlier, there are 2 yellow diamonds that are going to be featured by Christie's and Sotheby's at auction. And Sotheby's, they're going to be auctioning off a Sundrop diamond in Geneva. And this is a monster. We do have the picture. This is one of the most spectacular diamonds I have ever seen. It's November 15th. It's a pear-shaped diamond. It's 110.03 carats, VVS1, fancy vivid yellow diamond. Wow. The estimate on it is $11 million to $15 million. That is a stunning diamond. When you see the picture, they actually have a picture of a woman having it on her finger, and it just is just massive. It's amazing. Also, a vivid yellow 33-carat diamond is leading the New York sale for Christie's. And they're saying that this 33-carat diamond could go. This is a vivid yellow, super saturated pear-shaped diamond. 33 carats could sell for $8 million when it's auctioned October the 18th in New York. So we're about a week away from that. So that's why we're saying we have these 2 major diamonds coming up for auction at Christie's and Sotheby's. Harold has this 0.77 carat emerald cut fancy vivid yellow that he's obviously offering to someone out there who wants to add it to their portfolio collection. This is an opportunity to get in before prices go up very dramatically, in my opinion, Harold.
How exciting is that yellow diamonds now, I mean, this has never, ever happened before. I'm so thrilled about this, because these prices never, ever would have been reached 5 and 6 years ago. We're so thrilled about the fact that diamonds have done this. And again, I'm sure all of our listeners out there that own diamonds, and I know a lot of my clients are in that situation, you've got to be very, very pleased with what's going on. You know, I've got clients that doubled their money in vivid pink argyles from last year to this year. So, you know, the fact is these diamond markets are going to skyrocket in price. They're still reasonable enough at this point that you can get in, and there's buyers all over the world looking to buy these diamonds in China and India and Russia and all over the world. This is the most exciting time to be in diamonds. And again, I'm gearing up for some amazing things. I have not broadcast about all the things that we're working on in the diamond market, but we've got some things coming up that are going to make our clients a fortune. And again, in a very difficult time with the world economies the way that they are, most people are just trying to preserve equity, which again is a very smart thing. Preservation of capital is extremely important. But again, if you happen to be in that 10%, there's nothing wrong with guessing right and making some money in these type of markets. I've been through them before. I've been in the markets back in the 70s in gold, silver, and diamonds. I saw diamonds go up 500% in 1979 and 80, and I saw gold go from $35 to $850. And for the last 10 years, I've been letting my Canadian clients know which way to go in these markets. Gold has gone from $250 up to $1,900. Silver's gone from $380 all the way up to $50, and our diamonds are skyrocketing in price. I couldn't be more pleased for all of our Canadian clients out there that have put these diamonds away for safety and for profit. The next 5 to 10 years, we're going to cash in huge. And again, Randy, the news on the yellow flawless diamonds are just unbelievable. I've got yellow diamonds starting at $20,000, going up into the 7 figures also. I've got some amazing diamonds in any price range. So again, give us a call, look at our website, and again, I can send you videos and GIA reports on any diamonds within your price comfort level.
One thing we should mention for those that might have missed the show last week, you can listen online to the radio show at HESradio.com. We actually had a stellar week because Sotheby's out of Hong Kong received a record price for a fancy vivid blue diamond sold at auction. It was 6.01 carats. Fancy blue, vivid blue diamond ring sold for $10.1 million or 1.68 per carat. And that was a record. Also, we had another record, a 4.19 carat VVS1 orange diamond ring went to another Asian private for $2.96 million or $705,000 per carat. That was a record for orange diamonds. So my feeling is, Harold, yellow diamonds, one of these diamonds that's coming up here in the next month or so is going to sell for a record price, and it's going to blow the doors off the prices of yellows. I would get the newsletter from Harold this week. You can connect with him at 1-800-432-1022, 1-800-432-1022, the website rarecoloreddiamonds.com. Harold will be happy to send you the newsletter that includes all those stories that we've been talking about. We have about 4 minutes left here, roughly, Harold, but it's an exciting time for hard assets.
You know, it certainly is. And you know, you're talking about the vivid yellows going up substantially in price. You know, it was only a few years ago that a vivid pink Argyle diamond sold for double what it was supposed to. It came up to auction and was supposed to sell for $1 million a carat, and it sold for over $2 million a carat. And what it did is it changed the price of vivid pink diamonds, where, again, as I brought up earlier in the show, our clients that bought vivid pinks last year, in most cases, they've doubled in price already. So I think the same thing is going to happen in the yellow flawless market. I'm very excited about it. Again, I've got some inventory. I'm cutting diamonds every day. We have our own cutting facility in Antwerp, Belgium now. So we actually cut 80% of the world's yellow flawless diamonds. So in most cases, all the yellow flawless diamonds have to go through my company eventually.
The telephone number to connect with Harold about diamonds, 1-800-432-1022, rarecoloreddiamonds.com. To invest in precious metals, there's only one company that Harold recommends, that is Worldwide Precious Metals, wwpmc.com. The telephone number, 1-866-623-2002. Obviously, there are other companies out there that have sprung up in the last few years that give you the opportunity to invest with them. We would say deal with Worldwide. Give them a call. You owe it to yourself to give them a call first and find out why Harold recommends them over all others. Nick Barashev said this week, gold is not in a bubble. It's on its way to $10,000 an ounce. Like a spinning top must continue spinning or fall, our modern economic debt-based fiat system depends on perpetual growth. It is disturbingly similar to a classic Ponzi scheme, which requires new borrowers to bring currency into existence that can be used to pay the interest on the previous loans. The greatest threat to its health is slowing growth or deflation. With interest rates near zero, central banks have only one tool left to combat slowing growth: currency creation, which means inflation, printing money. These irreversible trends, therefore, virtually ensure gold will continue to rise in value for years to come. He says, in conclusion, I know many readers are hesitant to buy as they feel they have missed the boat. Perhaps this Chinese proverb will help. The best time to plant a tree is 20 years ago. The second best time is today. Harold, we have about 30 seconds left. I hope your wife, Harriet, and grandkids have a good time at Disney World, and don't eat too much candy or you'll have a big dentist bill.
You better believe it. They're all out having a great time now. Again, it's very important for me to do the shows. I do the shows no matter where I am. I've never missed a radio show in the whole 10 years, nor has Randy. So we take this very serious. We bring the news to our listeners. I wish everybody a wonderful weekend and a very profitable day.
Thank you, Harold. Plant that tree today. Start your own investment account, precious metals investment account with Worldwide. WWPMC.com, their website, WWPMC.com, the telephone number, 1-866-623-2002, rarecoloreddiamonds.com, the telephone number for Harold, 1-800-432-1022, 1-800-432-1022. That is it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. I should mention, if you want to get our newsletter, talk to Harold or talk to Worldwide. We send it out via email every week. Get your name on the list. We will talk to you next week.